What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief Ortex short interest and utilization update to basically give us a better understanding of where the baseline bare minimum short interest is at and the utilization, so we can get a better understanding of when we could potentially be seeing the pressure put on a lot of these lending institutions. Now, in addition to this, we're also going to have a little bit of a conversation revolving around options, stock pinning, and max Payne. There's a very interesting phenomenon in basically situation going on right now with AMC, their share price, and how the market makers are hedging these options. And I want you guys to be fully aware of what could potentially happen. But again, nobody knows for sure what could potentially happen with the share price. And this just goes along with what I have been saying, that basically if these institutions were able to manipulate the share price of AMC as much as we think they are able to, they would never let it get above these certain price levels. Now, in addition to this, we also have more updates that Citi Group is extremely bearish on the market going forward, and they are most likely liquidating their portfolios, repositioning themselves in order to buy the dip, or positioning themselves into other assets. So we have a lot of interesting things to go over with that situation as well. But before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you guys hit that subscribe button. So at the current time that I'm recording, AMC is currently trading at $44.55. Now, I apologize if the price is vastly different by the time you guys are watching this video. I am at school now, so my schedule for recording videos is a little bit out of whack right now. So just bear with me on the prices that we are seeing on screen. In the beginning of the day, we did see a significant sell-off all the way down to $42.37. We kind of formed that bottom right there and started to rip back up. We're seeing a little bit of volatility, but again, we are still on this upward trend, and I'm extremely bullish on what we have on AMC going forward. Now, when we come over and take a look at the Ortex update, we have the utilization at about 98.82%. Still relatively high, but at the same time, it's not high enough to really get to that forced share recall territory yet. We've seen utilization kind of bounce around over the last couple of days, and we are seeing a lot of shares go out on loan, a lot of shares get returned, but today we only have about 178,000 shares that were returned, with about 2 million shares that were borrowed at the current time. Now, these Ortex updates, these today's changes are live updates, so it is most likely going to change throughout the remainder of the day. But right now, there's a borrowed change against AMC of 1.8 million shares with a short interest of 17.37%. Now, I was getting a couple of questions in my live stream last night where people were asking, well, how can AMC squeeze with a relatively low short interest of this 17 to 20%? Well, that's not necessarily correct. Even if AMC's short interest was actually 17 to 20%, that is still a very high amount of the total shares that are able to be bought by retail investors that have been sold short and could definitely cause a squeeze. But the evidence that we've been seeing with the failures to deliver and all of the other manipulative tactics that we've seen revolving around AMC does suggest that there are counterfeit shares, synthetic short positions, and a lot of BS going on with the share price. Now, when we come over to Stonko Tracker right here, right now we have 43,919 call contracts expiring in the money for this week. So when we're thinking about these weekly options expiration dates, we typically don't see that high of an amount of open interest in volume, and we are seeing that reflected in this option chain. Now, when we come down to see the call contracts in the money, out of the money, and the puts, we do see that there's a decent amount of calls out of the money right now, which means that if we were to continue this next leg up, we would see a lot of options run in the money, and in addition, a lot of hedging on the buy side. So the institutions who sold these options would basically pump a lot of buying volume into the stock, pushing us even higher, forming that positive feedback cycle. Now, when we're talking about options and option selling and options hedging, we also have to talk about this concept of max Payne. When we come over to this Investopedia article right here, max Payne, or the max Payne price, is the strike price with the most open options contracts, puts, and calls, and it is the price at which the stock would cause financial losses for the largest number of option holders at expiration. So most of the time, the individuals who are holding these types of options, the options buyers, are retail investors. So the max Payne, when we're thinking about this, is the max Payne price that both calls and puts would expire out of the money. The most amount of those contracts would be out of the money. Now, when we think about what's going on with AMC right now, the current max Payne price for these contracts expiring out of the money would be $41 a share. In my opinion, I don't necessarily think that we are going to get down that low, but again, it is entirely possible that we would end up at those levels. And we can see right here, if you guys weren't able to see it on the screen or find it, the max Payne for the option chain this week for AMC, as we can see right here, is actually $41 a share. So that would be the price that the most amount of options would expire out of the money. So when we think about these market makers and these nefarious institutions, if they wanted to really put a hurt on retail investors, they would want the Friday close to be around $41. Now, when we think about the conversation and the point that I made earlier, that we all think that these institutions have so much power in this market to manipulate the stock. But I would say to that is that there's a lot more variables that are circulating around at any given time that they're not going to be able to account for. FOMO, a price movement up in terms of a gamma squeeze, even the shorts starting to cover their positions, even a fundamental news catalyst. There are a lot of different things that play into the equation of what the share price of a stock is going to be. And if they were able to manipulate the stock, we would see this go to $41. So let's see what we have here. But I do think that we are going to continue on this bullish trend upward throughout the rest of the week. Now, we also have to get into the situation with Citi Group. When we come over to this article right here, Citi's LIQUIDATIONS admits significant mistakes in bearish S&P call, but sticks with that 4,000 year-end target. There's a very interesting dynamic here that I want to make sure that you guys all understand, and we can't really take what these institutions are saying at face value. We have to look at it, look into it a little bit more and figure out, why would they actually think this market is going to come down? There's a lot of different reasons: the debt ceiling, inflation, the real estate situations going on right now. But that's not what we're going to talk about here. Last Friday, Powell's unexpectedly dovish Jackson Hole speech sparked another melt-up in risk assets. Ahead of the latest rally, Wall Street's most bearish strategists, such as Citigroup's top strategist Tobias Levkovich, had issued multiple dire warnings about a euphoria on Wall Street and how markets resembled 1999. I don't think he's wrong in this, but the timing of when they were projecting the market to start correcting might have been a little bit off. We saw this happen in the Big Short situation in the movie. Those individuals that were short on the housing market were 2 years early. Everybody thought they were crazy, and then it started to play out. His year-end equity call for the S&P 500 is 4,000. Now, but it has been forced to acknowledge in a note to the clients that he's made significant mistakes in his prediction, but he's sticking to his guns and predicting the benchmark will end this year at 4,000 before reaching 4,350 by June of 2022. Now, here's where this gets interesting. Why would these big institutions think the market would be coming down? Now, a lot of these banks have been performing like record high buybacks, which is basically taking supply out of the market, which pushes the share price of a lot of these different financial stocks up. That is one of the reasons why we've seen equity start to go up. But Citi is still thinking that we are going to see the market come down. Why? When we come over to this post right here, we've been over this situation a lot of times on this channel, but we are starting to see a lot more developments revolving around this derivative situation. So U.S. banking system has a $168 trillion nightmare looming. It was ignored in written testimony for today's Senate banking hearing. This happened a couple of weeks ago. But when we're looking at this right here, it's hard to see, but numbers 1, 2, 3, and 4, these are the top 4 commercial banking institutions: JP Morgan, Goldman Sachs, Citibank, and Bank of America. All of these institutions have been the ones that have come out and been overly bearish on the market going into the end of Q4 of 2021. Now, we also see that these 4 top commercial banking institutions also have the highest amount of derivative exposure. They have $168 trillion in derivative exposure at the current time, but all of the commercial banking institutions hold $188 trillion of derivative exposure. Now, think about this. We have phase 5 UMR kicking in that happened yesterday, which is going to increase the volume of margin calls and initial margin requirements on these over-the-counter derivatives. Most of these derivative holdings that these banking systems have are most likely over-the-counter derivatives. Just due to the vast size of these derivative positions, you're not going to be able to really go through an exchange and find a counterparty for these trades because you're going to need another large institution. So what we're looking at here is that these top 4 commercial banking institutions most likely know the risk of what they are holding on their balance sheet at the current time in terms of derivative exposure. We have seen Warren Buffett in the past come out and say that derivatives are essentially a ticking time bomb for the next major market correction. And the fact that the derivative exposure has come down over the last couple of quarters, but is starting to pick back up, is a sign that something could be starting to really play out. And we've also gotten word and have some speculation that a lot of these institutions have been messing around with these OTC derivatives, maybe total return swaps on AMC. And with all of these new regulations coming into effect, this is very, very bullish for what we have going forward. So that is mainly going to wrap up this update on AMC for today. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. Again, it costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you can stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.